Hi, welcome to the Market Alert for Tuesday, 15th of November 2022. So US stocks were lower on Monday after unwinding NY strength. Biden met Xi, according to the Asian press. Stocks snap rally amid mixed streak. Fed speak and rising inflation expectations. Apparently China are going to increase their COVID measures by the looks of things. And finally, tech rally runs out of gas despite dovish drawl from Fed. The Dow Jones pulled back as it was just shy or less than 2% from entering a new bull market from October lows. Thought it was already in one, but obviously still 2% lower than this. I think it's 20%, isn't it, or something that the market has to move. Still, it's certainly moved a long way. Economic news today to move the markets. Unemployment figures from the UK this morning. Average earnings as well. Then we get into ZEW economic sentiment at 10 a.m. 1:30 we've got some inflation data there. It's going to be interesting, particularly with the Empire State Manufacturing. We've got PPI as well. And we've got day one of the G20 Jolly in Bali. And gold-silver ratio moving back to the downside there. So silver regaining some of its momentum from Friday and Monday there against the gold price. Okay, let's have a look at the stock markets. Kick off with the Dow. And in the daily chart of the Dow, we can see yesterday we've got a bit of an inside bar going on there, but overnight the market moving back to the upside already. Expect this to go towards the highs depending on the manufacturing and PPI data at 1:30, but it's not that far away. If we have a look at the 30-minute chart, it looks like it's a long way, but given it's the Dow, we've got 100 points there, 200 points. 250 points is neither here nor there for the Dow to get back. Watch the low just in case we get a retest of this. The market's currently just below the DP, the 50 EMA, the 5, sitting on the 5, and then you've got the 20 below there. So the 20 close and lower important levels for the market. So you see the bit of a sell-off last night towards the close. Let's have a look at some of the bigger time frames because they're always interesting to see. We're at 62% in the monthly chart of the Dow, which is why we're seeing this bit of reluctance, and also at the 20 bar moving average. In the weekly chart of the Dow, we're at 89% from the last sell-off back to where we are at the moment. And I'm just going to add in this line here as well. So 34,287 is where you could expect some sort of resistance coming into the market. In the German DAX, kicking off with the daily chart, again you can see we've got a bit of weakness there yesterday. We've got a crossover as well. We're back to overbought. We are due for a bit of a correction, but the market already looking bullish on the overnight. If we go down to the 30-minute chart, now you can see there we've come off the lows. See how important the low and the high is when you're trading wise, which is why I've got them on the charts. At the moment we're above the DP, which is showing some sort of strength. There's nothing out until 10 a.m. for the German market, so again it's free to make its way back up to the high. In the bigger time frames, at 89% retracement in the weekly chart for the German DAX. Again, you'll see from the low here to yesterday's high, we're up 2,500 points now for the German DAX on the upside there in this latest move. In the monthly charts, let's have a look, see what's going on. We're just approaching the 62% retracement and the 20 bar moving average, not too dissimilar from that which we've seen in the Dow, and that's why again the market is struggling a bit, because in the bigger time frames, the weekly and monthly, we are at very important levels, and even the weekly chart has become overbought. And the 5-minute chart on the overnight, you can see a bit of a sell-off last night with the Dow, We gapped down, and then we said let's destroy this and move back, and they filled the gap, and now we're back above the DP, and all the averages are lined up nicely for the market to move to the upside there. However, any break below the DP, you've got the 50 EMA, the 200, the BRN close, another BRN, and then the low down here, but that's a good 70 or 80 points down to the low. The high is above here, which you'll see. It's more or less, if you're at the DP, you know you're midway between the high and the low. That's the easiest way to look at this. So yeah, we're sort of mid-range at the moment. Could move either way for the 5 minutes chart there. So yesterday the market, just bring this across for the 14th, absolutely nothing yesterday. Market really quiet. I wasn't at the desk, I was out yesterday. Market did a double bottom there, and then it took till 10:30 before the market actually moved up. But move up with the Dow at 2:30, and then down she came, and then it went back into a sideways move. And don't forget the G20's on as well for I think 4 days this week, so that's going to play a part as well. So yeah, that's where we are with the DAX at the moment, coming back towards the DP 20 bar moving average at the moment, and you've got the 50 EMA, so expect the market to hold in this area before it then resumes to the upside. In the S&P, and again same thing, we're stuck in a sideways range. On the upside we are, let's just draw this in, we're at 78% retracement for yesterday. Let's remove all these other fibs. And there we go, we've got 78, 89 there. I'm just going to save that so I don't have to draw it in tomorrow. Got to take out the 78, and the 89 has the 200 MA in its way there. So if you trade the S&P, just watch this area on the upside, 4,081. We need to get back above the 4,000 level as well there, 4,008. 30 minutes, again it was just sideways. We opened at 230, pulled back, and then went to the high of Friday, and then we sold off quite sharply down to the S1. We've got to the low from the S1 yesterday. That's going to be important. We've got the DP there, and you can see we're above the averages at the moment, and yesterday's close. And all these areas are very important if we get a move to the downside. And then on the upside, we've just got 3 resistances, the BRN, the R1. So again, interesting patterns there for the S&P. UK, well, since wishy-washy got in, we're sitting on the 200 MA, moving to the upside. 89% is stopping this market going up at the moment. We need some good news to take the market through the 89. Well, we don't even need good news, do we? Let's face it. Bad news is enough to move the market to the upside. And 30 minute above the DP, and the averages as well, a bit like we saw with the German DAX. And in the currencies, kicking off with the GBP JPY, we're at this sort of just above the 200 MA. We've got demand, we're oversold, ready for a move back to the upside. The dollars are way oversold as well, which we'll look at in just a moment. And these are the upside targets for the GBP JPY. Yesterday we had a nice move to the upside, which you can see there. Market then pulling back to Friday's close, and then we've seen a bounce off this so far. We've got the 200 MA in the way, and yesterday's high on the upside. Meanwhile, in the pound, also still strong, and trying to move above this high. Let's just move out and have a look at some of the bigger time frames for the pound. Well, actually, we've only got the monthly. I thought I had a weekly chart, so let's have a look at the monthly and just see what we've got going on here. So from here down to here, we're at 78%, which is again why you're seeing that market trading in a sideways range. Let me just remove these other ones that we've moved through. So 78 there, 89 is important as well. Let's get rid of that. And let's save that so that we can keep an eye on the bigger picture. I love the monthly, weekly charts, daily charts, and then it's a lot easier to trade in the smaller time frames when you know exactly where you are in these bigger time frames, as you can see there. And in the 30-minute pound, a bit choppy yesterday. We were up to Friday's close. We came back down and then we retraced. And then we went down and put in a new low, overbought, and then bounced off this. And again, you can see we've got these 89, 78% retracements with the stochastics. And then we became oversold overnight, and we were at yesterday's close. We're also at 117.50, where the market has got a huge lot of volume there as well, and the market's come off this level, so we've got about a 62-78% retracement there at the moment in the 30-minute chart. Let's just have a quick look. Yeah, we're bang on 78 there at the moment. And finally, US dollar, you can see that we're still sideways to lower from the demand on Friday. Monday, the market sideways with an inside bar. Bit of weakness there at the moment. Could do with a bigger time frame on this as well. So let me just grab a weekly chart of the US dollar. So now we can see where we are in the bigger picture. You see, the problem is with daily charts is that you have to drag the chart all the way over to start seeing where you are, and it looks and gets a bit messy. Where as soon as you just load up a weekly chart, we can see exactly where we are on the pullback, and also we can start off by looking at the stochastics. We're more or less oversold on the downside, and from here up to here, that takes us to 78%, which is why the market's sideways in the daily chart there, where you're seeing the demand at this level. So when you combine all the time frames and you make note of these important areas, you can then use these as areas for really good entry points in the market. So there, we're back at 78% for the dollar. If we look at the daily chart again, we can see we've got the demand. We're oversold as well there. So we've got the weekly chart that's just coming into being oversold. The daily chart the same, and in the 30-minute chart we're just coming back to that oversold as well with the DP and the close. So here what I'll be looking for is the market to hold at the 62, 78 or 89, and then maybe start moving to the upside. If not, we're already back to the golden ratio 62, get back above the DP and then move back towards the high, which will then launch you off these levels that you see in the daily and the weekly chart. Meanwhile, in the metal, silver continues to defy the odds of being slammed at the moment and moving to the upside there. We've got a strong move in the daily chart. Also, you'll see that we're overbought, due for a bit of a correction. And in the 30-minute chart, you see the big move up yesterday, a bit of a pullback overnight, and now sitting at yesterday's high. We're through the $22 range as well. We've not seen this for a long time in the silver market, and in the gold market also back above the 1750 area. We're heading towards $1,800 an ounce, having traded all the way down to this level here, which is around $1,600, where we had the triple bottom before the market moved higher. Really could do with some bigger time frames on this, but we have got the high to the left there down to the first low, and you'll see we're in 78.89 in this area for the gold market as well. And in the 30-minute chart, you'll see that we're sideways in this market, sitting on yesterday's close, still above the 20-bar moving average there, and currently the DP. So yeah, there's a quick roundup of yesterday. It wasn't an exciting day by any means. Hopefully it'll pick up a bit today as some other news, economic news out, but the G20's going on as well. We'll just have to wait and see, but at the moment, let's say quietish day for yesterday. Okay, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.